I've gone ahead and done it and have reopened my Forex live trading account. So let's discuss that briefly, and of course, just do a quick look at the markets here uh, on this Tuesday, February 10th, 2026. Futures Brizio here. Hope everybody's having a great week so far. And so let's just jump right in here, take a quick look. So we'll start in futures here, looking at rice. Again, we continue the uptrend on rice. I'm just looking for an entry. You can see we continue to be pretty bullish here on the longer time frames due to this monthly bounce down here and our commitment to traders data. So overall, looking for longs. And then basically what I'm doing now is waiting for setups on the 4-hour chart using the stochastic RSI indicator. My ideal situation is to have it come all the way down in the case of looking for a long position, have it come all the way down to the oversold area and then wait for a crossover such as this signal right here. That was back on January 25th, 26th, somewhere in there. Now, occasionally you will see this indicator only come back to about the 50% level, the mid-level. And this is an example right here on January 20th. You can see we had this pullback and then price did go up and make new highs. So this is a valid entry. However, it's not a great entry because you can see from an indicator standpoint, it only came to about the 50% level, and it did go up. But by the time you got the signal, it did go up a little bit for another 8 hours or so. But it wasn't a terribly big move. But I'm not saying it wouldn't have been a profitable trade, because it would have been had you gotten in at the signal, which realistically again was around the close of this candle. So you can see there's not a lot of headroom between the close of this candle and this high. So the better ones are for it to come all the way down into oversold, because that means the pullback's been much deeper. And assuming it hasn't broken any market structure on the time frame, these are better trades. But these 50% levels are ones that I would look at too. Sometimes sometimes these go much further. Because what this is suggesting is that the selling pressure is very light. There's just not a lot of selling pressure. So the buyers are still really strong. But in this case, we didn't get a big pullback and we didn't really push high up here for a new high. But so, and the other thing is this can be risky because obviously, in hindsight, you can see this did go up and make a new high. But in real time, if you take this trade right here, this could easily just, bounce up a little bit here and then continue to roll over and keep going down. And then you get stuck in a losing position, or you have to take a loss. So this, depending how aggressive you are, you either want to, you can consider trades like this where it only comes back to the 50 level. But the better ones are obviously when it comes into one of the extreme levels like this. Okay. So either way, you can see right now on rice, we are again at that 50% level. Looks like we're trying to turn higher here, but of course the market is closed for the day now. So nothing else is going to happen here anyways. But, will this end up being, a trade similar to this one that we can buy at this 50% level? We'll see. When the market reopens for the overnight session, we'll see how it does. Although I don't like trading that overnight session. Sometimes that ends up being, a decent trade. This signal came, somewhere around 8 p.m., which is basically when the overnight session starts for me. And it was definitely confirmed at 8 o'clock the next morning. But price had already moved. So this is kind of where we stand with rice. We just going to continue to punch higher here? Or are we going to get a deeper pullback here? Although I don't like the price action coming into this retracement because it's just kind of moving sideways. So we'll see what happens with that. Okay, so moving on to soybean oil. Pop out to the weekly chart. You can see we're at a weekly swing high here. So I'm a little bit, I'd be a little bit concerned about, getting into long trades here from this position because of where price is sitting right now. Again, sitting at this weekly swing. So, I would like to see price kind of bounce off, kind of if it's going to go higher to break through here and keep going higher. When it comes up here, it definitely will react off of an area like that. Now, whether it's a sustained move down, I think that's to be determined. We do still have structure sitting down here on the daily chart. So we're not in any risk of breaking any market structure, but just be aware of where price is sitting right now. It certainly doesn't mean it can't go higher, and it very well might. You can see on the weekly chart, we don't have any real major resistance on that, above here. And remember, our commitment of traders is still bullish on soybean oil. But again, I'll wait and see if we can get a break through this level. Looks like we are closing near the highs here, looking at regular candles. So this very well may punch higher, but I'll wait, for this to break out a little bit and confirm it wants to break through this resistance area. And if so, then this would be the next target up here at this weekly swing. Okay, so on soybean, I got a position open here. You can see it's in profit 425, but the market's closed for the day, so I can't close it now, but that's okay. I'm probably going to leave it and probably put a take profit up a little bit higher here. But we'll see. I may just decide to close this during the overnight session too. But this trade basically is based on, weekly on daily price action here, making higher highs, higher lows. And we obviously took out market structure on this move down. If we go to the weekly chart, we do have weekly structure sitting back here. Okay, so I was overall pretty bullish on this. The one kind of difficult part of this is that the commitment of traders is in a downward move. So it is bearish from a COT standpoint, but we may find that, when we get the COT update, that this does turn and start going higher. Sometimes there is a delay. Again, remember, the COT is only reported weekly. But from a price action standpoint, this is pretty bullish. And I would think we'd see prices come back, at least towards this high up here somewhere. So we'll see how that one plays out. Canadian dollar, the last entry was back here. You can see this on the daily chart. We're clearly making higher highs, higher lows here. Although we are approaching an area here on the weekly chart that's pretty congested. You can see from anywhere from about these highs where price is now to maybe just a little bit higher, that this overall, there's a big congestion area right in here. You can kind of see it. It basically runs this whole gamut right here off the weekly chart. So, they're with a little bit of breakthrough, here and here, but ultimately they pulled back. So as it runs into this kind of rectangular area, I am a little bit more cautious on longs. But we do still have bullish COT on the weekly chart. So that's something. But I likely would be a little bit more cautious heading into this zone. We may pop a little higher because we're not back to this area yet. So I think we, very well could have at least one more run higher into this zone. But once if it does get up into this shaded box that I drew on the weekly chart, I'd be a little bit more cautious about long positions inside of that box, because I do expect that we would see at least a pullback. Doesn't mean a reversal, but a pullback of some kind as the market players, react off of this level. Now, it could certainly go higher. You can see this is a pretty wide box being a weekly chart, but you can see, we certainly could go quite a bit higher, and this could continue on for several more weeks. So I'm not discouraging you from considering long positions in this. Obviously, you got to, if you even trade this market, you got to make those decisions, but just be cognizant of the where you're at in the grand picture on the long-term chart. All right, let's see here. Soybean meal. You can see I'm also sitting in a kind of a weak long position here, which is, again, the market's closed now, but it's in a small profit, $70 on this. And basically, We have a bullish COT here starting to point higher. We had this strong move up and a pullback on the weekly chart. And then on the daily chart, we started putting in basically, we put in this low and then we broke this market structure. And I treated this as basically, a higher low right here. And that's what my entry was based on. And going down to the 4-hour, we had a stochastic RSI entry right here, which triggered, and this is actually what triggered me to get into this position, was based on looking at the higher time frames and then this stochastic RSI signal pulling out of the oversold area. So I'm going to hold this one. Again, I'll look at it tonight during the overnight session, but I think we'll probably, just looking at this just from a pure, well, not just technically, but COT and price action, that we probably will move higher on this. And you can see from a Heikin-Ashi standpoint what it looks like too. Still pretty bullish. All right, and on corn's been a mess. I actually took a loss on this today. It's been really kind of a frustrating market, but essentially, again, if you go out to the higher time frame, you look at the weekly chart, we have this double bottom that price has reacted off of, but we do have longer term lows well below that. If you go to the monthly chart, you can see several taps on this area down here around, between 310 and 320, somewhere in there. So I'm not saying that this double tap bottom here on the weekly chart is going to be the end of this downtrend, because again, there are lows further below here. And so this could just be a bounce, but again, just cautious of direction of longer term price charts, but it doesn't mean you can't trade it. Now, if we go to the daily chart, again, we had that move down that tapped that area. This is that yellow line I drew on the weekly chart. And then we've had this kind of corrective move up, making higher highs and higher lows, but not terribly aggressive, kind of overlapping waves. And then we had this high put in here on just around Christmas, came down, came up, put in a lower high right here. Okay. And then we had this big impulsive move down in mid-January for a few days. And now again, we're kind of making a kind of a lackadaisical sideways up corrective move. So because of this lower high, this impulse move down, and what is still a little bit of room to fall here on the weekly chart or the monthly chart, even though we've got this double bottom on the weekly, I'm still overall bearish this market. And from a COT standpoint, we are still bearish. So there's that. So again, basically what I'm looking for, this is an area where this indicator can really cause you a lot of headache, or any oscillator can do this, not just this indicator, any oscillator, because here's that. Now we're down on the 4-hour. If we look at that, here was that impulsive move down on the daily, and then we've had this kind of meandering corrective move up. But look at all the signals on that. So if you're looking for short entries here, so we're looking for price for the oscillator to be in the oversold area and look for crosses below. During this whole corrective move, we had 1, 2, 3, 4, 5, really 6, 7 entries. Okay, and of those, if you look at this one, would not have worked out because you got the signal at the low. Same thing pretty much here. You got the signal when price had already bottomed. Okay, yeah, this one here, same thing, price had bottomed. This one, maybe you could have played for a day. You get the signal was basically around here, and it did continue to go down a little ways. And then this one would have been nice, right? You got the signal pretty much on this candle, and it went all the way back to the trend line, and then it bottomed. And then we had this little tiny one right here. Again, that one would not have worked because that one was at the low. And then we've had this one, which started on Friday, and that one has now bottomed out. So that move is over. So you can see, 7 entries, 3 of them probably would have made you some money had you taken them right at the signal, but the rest of them would have been losers or break-even trades. And so this is, corrective patterns and kind of sideways overlapping patterns is where these oscillators can really hurt you. So this is where I say, you have to use a little bit of discretion with some of these, and you have to understand that sometimes you're going to take losing trades, and it just doesn't matter, right? The most perfect system in the world sometimes is going to generate losers. So that's the way it goes. But the other thing you could do here is you could just use market structure. So as you can see coming up, to me, this was the last swing low that was put in before this high, and then we've come back down again. So I would want to see price kind of, take out this structure, not only break the trend line here, but actually go down low enough to break this structure. Because as I showed you, there still is downside room here certainly on the monthly chart, but if that weekly level doesn't hold, this has got a long way to fall. So, you don't want to FOMO too much, and I did that today, and I took a loss on it. It wasn't a huge loss, it was about $100, but, I had a pretty tight stop loss because I wasn't overly confident on it, but, and technically it did not match my my strategy either. So there's that. But basically, not only are you looking for a signal on the oscillator, but if you want to be even more sure, then you wait for market structure to break, which again is probably somewhere, conservatively below this horizontal line, because that takes out this low right here. But at the least, somewhere, below this trend line. Okay. So, any solid candle close below this trend line would hopefully point to a better entry. Now, we also do not have a stochastic RSI signal now either, so it really doesn't matter, because from a standpoint of the indicator, we would want this indicator now at this point to come back up here again, okay, and then finally give us a good signal to go lower. So again, whether you want to wait for, a better trend line and structure break, or whether you want to try it again when price comes up into this overbought region, try to sell it again, those are your two options. And that, of course, is if you believe that prices are going to go lower, which from a structure standpoint, to me, still looks pretty bearish, and we do still have bearish commitment of traders data. So I am still looking for this to break lower at some point, but when that happens, it'll probably take some news, honestly, some USDA release on inventory or crops or something like that. And in the meantime, the market's just pretty much happy with what it's doing right now, and it's just kind of moving sideways. All right, so that's the wrap on futures for today. Now, just talking about Forex briefly, I've been trading pretty much the same strategy as this on Forex. Basically looking at the daily chart or the weekly chart, or not use. I try not to go to the monthly, honestly, except the only thing I really use the monthly for is to just look for long-term support or resistance areas, like major swing highs and lows. But mostly I'm using the daily, weekly chart, just try to establish the trend. And then I'm waiting for pullbacks, and then I'm dropping to the 4-hour chart and using the stochastic RSI and just visual skills to find entries. Okay. And that's all I'm doing. And, by using the daily chart, I'm getting maybe anywhere from 2 to 4 trades a week. I follow 20 Forex pairs. Yeah, these are the Forex pairs you can see here on the right that I follow. It's pretty much all the majors and minors, nothing really exotic. But there's 20 of them here. And so based on having 20 pairs, obviously there are some that are not trending, in my opinion, or on the daily chart, or, are either sitting at, they're either sitting at major support or resistance levels on the high time frames, and I'm just, going to just let those slide, or they're kind of in a sideways consolidation pattern on the longer time frame, such as like a Euro Canadian. And so I'm not going to bother. So something like, Euro Canadian, you can see here is, on the daily chart is really choppy. It's not really trending. I mean, it is drifting lower, but overall it's, it's kind of holding this support. It's just not really doing much, as opposed to something like, pound Kiwi, right? This has been trending down here. This is the daily chart, and obviously there have been entries along the way here on the 4-hour chart. And I actually did take a couple of these. Euro Kiwi's the same way. This one's actually pretty nice, right? This has been a nice trending move down, again, as opposed to this, right? And so that's how I've been trading this. And again, with that, I've been trading it just on my funded account. I have a Forex funded account. As I've told you guys, I've not had a live Forex account in over a year now. But old habits die hard. And I do like Forex, and I've had really pretty good results just doing it this way. Again, very mechanical. It's exactly what I do on futures, nothing different. Um, you know, except obviously there's some discretion involved with any manual trading method. But overall, it's pretty much the same. Establishing the longer time frame on the longer term trend off the high time frame, the daily or higher. And if there is a trend, then at that point, drop into the 4-hour chart, waiting for a pullback and waiting for the stochastic RSI to validate a re-entry into that trend. And that is what I've been doing in a nutshell. And obviously, again, just keeping in mind any long-term market structure areas or support and resistance areas on higher time frames, daily at minimum. It's just to make sure you're not selling into a major bottom, that's not showing on the weekly or the monthly chart, and you're selling right into it, and most likely that's not going to work out. And I did talk about this on futures, but sometimes you don't get that full pullback. Now, like, so here on the euro dollar, looking for long positions, that's this blue arrow I have on here. But look at this last entry, right? Here is the pullback. You can see the stochastic RSI only got down to around the midpoint, the 50 level, or maybe just a little bit, but it did not get down into this oversold level. And then it had this really nice rally. And so this is what I'm saying, that you have to just kind of use some visual skills. So, I mean, looking through here, it's like, okay, price is chopping, and then you get this signal. Obviously, the sellers are having a hard time pushing this lower. And if nothing else, then this candle, if you were going to, consider a trade like this candle right here would have been the entry, in my opinion, because right here, this is a Heikin-Ashi candle. It had a flat bottom with no wick on the bottom, which means, strong buying pressure here. These first three little candles are very small and had wicks. So this is one, would have confirmed, even if you weren't quite comfortable taking this, but you can see this was a good signal, right, to go long, even though it didn't make it all the way down here. So again, that's just one of those discretionary things that you have to just play around with. And understanding sometimes you're going to be wrong. You'll take this signal and price will just keep going down. You'll get knocked out, or you don't take the signal and price goes up and you miss the trade. So that's just trading. That's the way it goes, right? So I did want to point that out. But anyways, for those of you who have been following this channel a long time, I traded Forex from about 2011 up until about a year ago. So really about 13 and a half years, 14 years, somewhere like that, with mixed results, quite frankly. And had some really good years, had some really crappy years. And but I was trading on shorter time frames then, a lot of like 1 hour, 15 minute, and just trying to make the whole day trading thing work. And it just didn't fly for me. But since I've kind of applied this strategy now, again, using Heikin-Ashi candles and just monitoring the high time frames for trend, and then using the 4-hour chart for my entry signals, with or without the stochastic RSI, but just looking for what looks like an obvious entry on a shorter time frame, the 4-hour in particular, I've done much better. And it also only requires me to look at the chart, each one of these charts, once, maybe twice a day, if I'm not in a trade. I'll look at it in the morning, and I'll look at it during the overnight session to see what might be setting up. I can throw some alerts on my chart, and that's it. And again, I'm getting anywhere from 2 to 5 trades a week in Forex, so it doesn't require a lot of time. Then once I'm in it, I just manage it on the higher time frame and just kind of like pick what, looks to be a sensible take profit and stop loss area, and then that's it. I have none open right now, otherwise I would show you. I don't have any open right now. I was in a Euro GBP trade today that I'm now out of. I took a loss. I think I mentioned that before, but I'm not in anything else right now. So the next time I get into a Forex trade, in the next video, I'll kind of highlight it and show you what my rationale was for entering and the result, or if I was still in it, how it's going. I'm not going to go through every Forex pair the way I do with Future. It's too much. The video would be an hour long, and suffice it to say that, I just don't think that's a good use of time unless somebody wants to see it. But understand the process. What I showed you for futures is exactly the same for Forex. Again, monitoring the higher time frames, daily or weekly, somewhere in there for trend. Once a trend is identified, then dropping to a shorter time frame, 4-hour chart, looking for a re-entry of that trend on there using stochastic RSI. And the only other, like I said, caveat is just monitoring those higher time frames for any major support or resistance or swing area off the high time frame that price might be bumping up against. That you got to be careful you don't buy or sell into one of those, because price will have a reaction off those major zones. It doesn't mean a reversal, but it will have a reaction. So if you're buying into a strong overhead resistance area that's showing up on a daily or a weekly chart, and you try to buy into that, you can almost guarantee the price is going to have a significant pullback off that area, and you're going to be stuck in a losing trade. Ultimately, it may turn and go back up and break right through that area, but I just like to be cautious around those type of zones on the chart, because everybody else sees them, whether they're take profit areas, they're stop loss areas, they're breakout zones, whatever reason somebody would be looking to do something at one of those areas, everybody sees them. And so, like I said, they're self-fulfilling prophecies. And so you just want to be cautious around that. But outside of that, it's the exact same process as what I do in futures. So that's why I like it, because it's very mechanical and I can apply it to both markets, to Forex and futures. And it's been working pretty well, I have to say. So because of that, I decided to reopen or open a new Forex live account, personal account. I have my funded account, which I've been trading for a while, but I'm going to throw some capital into a live account and just kind of duplicate my trades that I take off the funded account, put them into my live account, and have both going. I've given myself enough data now where I feel like that would be okay to use that strategy and apply it to both accounts, and be able to build capital a little bit quicker, so I can maybe buy another funded account. So, but like I said, futures, I already had both. I already have a personal and a funded one, but Forex, I've only been running funded only for quite some time now. So anyways, guys, I'm going to leave it there. We're at just about a half hour, so I hope that was helpful. Any questions, comments, leave them down below. Make sure you smash that like button. And if you do want to see anything or any other analysis of this or anything else, just drop it in the comments. Happy to do that. And we'll be back. Hopefully we'll get some setups in Forex here over the next day or two, and can demonstrate those, and we'll just continue on the path with futures as we've been doing, which again is pretty much the same strategy. All right, guys, so take care. Have a good rest of the day. We'll talk soon.